There is relief for mortgage holders this afternoon, with the Reserve Bank keeping interest rates on hold for only the second time in 14 months. The board says it made this decision because of the uncertain economic outlook. Let's go live to political reporter Jennifer Beshwati in Canberra. Jen, this relief could be short-lived.
Yes, that's right. Good afternoon. And well, firstly, yes, definitely a sigh of relief from many mortgage holders, business owners and renters today, with the Reserve Bank hitting the pause button on interest rates, keeping the official cash rate at 4.1% for now. But yes, some economists don't believe this relief will last long. Many predict that there will be another rate hike next month as the official quarterly inflation data is released at the end of July. And while inflation certainly is down from December, it's still way too high, and the Reserve Bank says that it will do whatever is necessary to bring inflation down. But nonetheless, some good news, somewhat good news for Australians today. Here's the Finance Minister, Katie Gallagher.
Today's decision by the Independent Reserve Bank to pause interest rates will be, for many Australians, some much needed relief. While this is welcome news, we understand that many people remain under strain from rising mortgage payments and cost of living increases.
Now, the Reserve Bank did weigh up a number of issues today before making this decision. It says in the official statement that the decision to hold interest rates steady this month provides the board with more time to assess the state of the economy and the economic outlook and associated risks, because many economists do believe that further rate hikes could push the economy to the brink of recession. Some say it's a 50-50 chance now. And of course, with a slowing economy, that means job loss. So we can see that the Reserve Bank is being overly cautious today. And while many economists, as I mentioned before, do believe that this relief won't last long, there is some commentary today that perhaps, given the state of the economy, this could be the end of rate hikes. Wouldn't that be nice, Anne?
People would be happy to hear that. Jen Beshwati in Canberra. Mortgage holders are breathing a little easier this afternoon after the Reserve Bank left interest rates on hold at 4.1%. But the battle to contain inflation continues, and economists are warning there could be more rate rises ahead. Network Finance Editor Gemma Acton has the latest.
Good afternoon. A sigh of relief for many households around Australia, not just those grappling with mortgages, but also renters who are feeling the pain from landlords passing on their rising repayments. Economists were evenly split on whether the Reserve Bank would tighten the screws again this month or hold. And yes, the board held, but that decision came with a warning that further rate hikes may be necessary. Now, this pause will buy the RBA some time to assess how well Australians are coping with the 12 rate increases to date. Inflation is still top of mind to the Reserve Bank, and while headline inflation took a decent step backwards during May, falling by more than 1% to 5.6%, core inflation is still worrying. Core inflation strips out items like energy and groceries, whose prices jump around a lot each month, to try and get a clearer picture of whether inflation is trending higher or trending lower. The latest core inflation reading shows very little evidence that price pressures are easing, and suggests there is still a lot of work to do to get back to within the Reserve Bank's 2 to 3% target range. So the Reserve Bank leaving rates on hold today at 4.1%, but with a clear warning they could go higher in the months ahead, and with economists betting the rate hiking cycle has not run its course just yet.